forecasts of practically all other geographies. IMF says India remains a bright spot with its strong growth and rising real incomes. On the global economy, the fund has raised fresh alarm. It says it expects the world economy to grow by 3.2% instead of the 3.4% it projected in January. It expects growth to rise to 3.5% by next year. This comes on the back of loss of growth momentum in the advanced economies and continued headwinds for the emerging market economies. So while the global recovery continues, it does so at an ever-slowing and increasingly fragile pace. US growth is expected to remain flat at 2.4% this year, followed by a marginal rise next year at 2.5%, dragging down the advanced economy's growth to 1.9% in 2016 and 2% in 2017. While the emerging and developing economies will continue to account for the lion's share of global growth in 2016, prospects across countries remain uneven and generally weaker than over the past 2 decades. The IMF expects the emerging economies to grow at 4.1% in 2016 and 4.6% the year after. China's growth is seen slowing down further to 6.5% this year and to a further 6.2% by 2017. And any sharper slowdown than what is currently projected could have strong international spillovers, especially through trade. Coming back to India, the fund says private consumption, which benefited from lower oil prices and higher real incomes, will be the primary growth drivers. It even adds that a faster than expected fall in inflation in the country has left room for further monetary easing, but warns that unfavorable monsoons and the expected public sector wage increase may spoil the party. In Mumbai, with Ritu Singh, Arundhati Ramnan.
All right, let's take it across to the big macroeconomic data released today, and there's some cheer for the Indian economy coming in. While retail inflation continues to edge lower, there is finally some relief on the industrial output front, with the February IIP number posting an uptick of 2%. Let's take it across to the expert. Lata Venkatesh joins us with all the details. Thanks so much for joining us, Lata. Is it time to really celebrate?
Yes, sir. It is time to celebrate on inflation for sure. The inflation number has come in at 4.83% compared to expectations of 5.05. So that's a good 25 basis points lower than expected, and compared to 5.18 in the month of February. So that's again a 40 basis point fall. Within that, even the food inflation number has come in at 5.2 compared to 5.3% in the month of February. Within that, whether you looked at vegetables or whether you looked at pulses, all these are tricky items which can rise as winter ends. But